Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Welcome to the Private Lenders Podcast. I'm Jason Balin from Hard Money Bankers, and in studio with me live from Alabama, Ray Burkhalter from REI Funding Partners. Known Ray for a few years, has definitely turned into a friend. We get to see each other at least twice a year, and we chat as well. Ray, how are things?
Great, man. Great. Glad to be here. Thanks for the invite, and looking forward to it. Love the podcast. Glad to be a part of it.
Absolutely. We really appreciate you coming on and sharing some knowledge with the group, especially since you've had such a pretty successful private lending career over the last, what has it been, since 2011? Is that right?
Yeah. 2011 was like the very beginning. We can talk about some of the interesting changes that happened along the way.
We all have those stories. So tell us a little bit about why you got into private lending when you did.
Yeah, it was a kind of a good step for my wife and I. We had a business that we started in 2006 of buying single family properties and small multifamilies, and buy and fix. Some of them we would hold, some of them we would sell. Prior to that, I had an engineering career for over a decade. I never thought I'd be in real estate investing, and she got me interested in that. And then, like probably many people out there, I read a copy of the Rich Dad Poor Dad book, and I kind of got exposed to other financial thinking. And so we started doing the properties 2006. By 2010, market had changed quite a bit from 2006 to 2010. And it'd been through some ups and downs, mostly, successful. We learned a lot. Along the way, we made some great connections. And one of those connections turned out to be a guy that was teaching how to do private lending. He was running a 3-day class on that in California. And we became part of that. I started, went to the class, started working with them. And 2011, my wife and I we made that shift over from being the hands-on rehabbers to funding rehab projects for other people. So that was kind of the beginning.
Yeah, I think that's the same transition that a lot of people take, including ourselves. We dabbled in real estate. We bought some rental property. We did some flips. We did some wholesale deals. We're like, owning real estate, it's hard. And everything's hard, right? Every business is hard. And I'm sure you can attest to that. But it also is like what you're passionate about. I really like kind of being on the finance side. And, even if you're like a deal junkie, you can still get that deal junkiness out by structuring deals and helping real estate investors. What did kind of like year one look like? Was it just you and your wife at just the two of you guys in the business? And like, where did the capital come from for the first few deals? Things like that.
Yeah, so it definitely was just me and my wife, and we were still trying to figure out what the forms that we're using. And we had moved from Tennessee back to my home state of Alabama. At that time, my dad was in bad health. We wanted to be close to him, and the private lending was perfect because it was very portable. We had to kind of understand, the lending rules here and usury and things like that for Alabama. But with all of that settled, it was easy to kind of get into the flow. Now, it would just being the two of us, we weren't doing very much then. And the capital, interestingly enough, came from, it was rollover from all the people that used to fund our own buy and fix deals. So I from day one, for some reason, I've always been good at raising money. And we had a good bit of money, the people that were funding our deals. So when we were going to turn that opportunity off, we wanted to give them another opportunity to still be funding deals. And so we just transitioned people over from funding our deals to funding other people's deals that we were underwriting.
Yeah, that's a good way. I like that. And I think a lot of folks that if they're just kind of getting set up in the private lending world, or if they have past real estate experience, maybe they're already lending out money, that's a good source. I mean, we have some experiences with that as well of, a lot of a lot of other hard money lenders would allow us to, they'd invest, I guess they invested with us early on. And yeah, they were able to get higher rates of return if they lend out themselves. But they're like, wait, you guys keep bringing me these really, really good opportunities and good deals, and you guys will do all the work. I'm happy to just take a smaller rate of return. Back in those days, it was like 15-5 were the going rates. This day and age, it's closer to 13-3. But, they would just take the 10, 12% passive return because they had capital that they wanted to deploy, and, allow us to just run point and do everything and turn into a passive investment. So that, that's definitely a good point. Absolutely. Definitely a good point. And then it grows from there, right? Right. Do you think, like, with some of the deals that you had, like the borrower deals, loans that you were closing, did that come pretty easily, or did you guys have to start marketing channels, or did you just kind of pick up your Rolodex and have those deals kind of flowing in?
That side of it started up pretty well because we had been investors for a number of years and involved in, at that time, the Nashville Real Estate Investor Club, which is a pretty good sized club. We had a lot of connections, and we had, reputation for doing deals. And so we first started lending to some people that we already knew through that. When we moved here to Alabama, first thing I did was start going to local real estate investor clubs. Interestingly enough, I thought, because I was still newer at private lending, I thought when I went and said, hey, I've got money to lend, that people were just going to line up. But I learned over time that, even to borrow money from you, people have to have a certain amount of trust, whether that's trust you're going to be able to say what you do, close on time, all of that. So yeah, we kind of started building relationships through the local real estate investor group. And some of it takes time. There were one of our best early on borrowers is someone we met at a lunch with a couple of other borrowers, and he was fully self-funded at that time. He was doing a few deals. He had all the money he needed to do those. About a year later, he calls up. He said, hey, you still lending? I said, yeah, what's going on? He said, well, I've got all of my money tied up in these 3 projects, and I'm seeing these other great deals go by. And so he turned into like almost a deal a month funder with us. So some of it's the longer game, but yeah, being out there meeting people in person is where that front end piece started for us.
Yeah, I agree. I mean, it was like 5 full years for us of grinding meetup groups and REIA groups and going to the properties and meeting people, because you're right, there's a huge trust factor on that. I remember early on, back in the day, there wasn't that many gurus or mentors or anybody teaching this stuff. It was hard to find, or there still isn't today. So, it's few and far between. But I remember we were very proactive to learn as much as we can from the experienced people that were ahead of us. And it was typically like older attorneys that would lend their own capital out on a private sector. So, in the local markets, we would try to set lunches up with them. Yeah. And, it was hard, but like we would try to, and like we did, and we'd learn from them. And I remember going back to what you said about borrowers are kind of underwriting you to make sure that you can do deals. He said, make sure you always have the capital, and make sure when you, not that you always have the capital, make sure you close when you tell them you're going to close, and make sure you do construction draws quickly. Those were the 2 like big takeaways. And to this day, never missed, a closing timeline. And like all of our draws are like a day or 2. Like we have full-time inspector in house, because that's so important to do that, to keep these people coming back. The service we're all providing them is quick, easy capital. And that's why they'll pay a premium for it. So it's good. I agree with you 100%. I agree with you 100% on that. So how long do you think it took? Like, how many deals did you do before you felt like you needed to hire somebody?
Well, I mean, we were really just comfortable doing a couple of deals a month. It was the 2 of us. I was still going out doing a lot of these training classes. Like I said, the guy that I learned from, I started working from him and doing some training and involved in a lot of ways. So I wasn't in the day-to-day. And my wife said, we could do a lot more with this if you were here really, working with me in this. And I didn't listen early enough. And I had to apologize to her later, because she was right. You mentioned earlier doing something that you're passionate about. And kind of staying close to the deal and keeping that feeling. And I mean, being in that was more, energizing for me. So in late 2018, we just had to sit down and have that discussion to say, do we want to grow this and scale up? Or do we want to, one day we retire and, who we're going to fund deals through then? We didn't know you guys at that time, but where are we going to put our money when we want to retire? And so we prayerfully made the decision to scale up. A friend of mine gave me a copy of the book Traction. I'd never heard of the EOS, system before. We started implementing that. And then, it was in 2019, we met our first hire, a loan processor. Shortly after that, we started, bringing on a couple of other people. Originator was an early hire.
So when I started this business, I never thought of this business as an investment vehicle for myself or family or friends, just because I started with no capital out of pocket in 2007. Is that an approach that you were aware of or were attracted to early on, where it's like, hey, if I start this business and I put my own money into it, I could get 13% in 3 points or 14 and 4, or flip the money twice a year, make a 20% annualized return for every $100,000 of my own money I put into this deal. I can get a $20,000+ a year passively, for the most part, with my capital. Like, did you guys know that going into this business and picking this business model? Because I certainly did not. And it took us, and I've shared the story a lot, like it took us till year 3 where one of our capital investors got a 1099 INT from us for $400,000, and he didn't know any deal that he was in. And he had like $2 million, I think, deployed at the time or whatever it was. So it was like, it was a lot of money, but it wasn't like, something that wasn't fully achievable. And I'm like, holy crap. I was like, this is what we're missing. So like, was that part of the business attractive to you, or did you even understand that part of the business when you started? Because I certainly did not.
I could see it in the horizon, just because I did, have someone that really understood this, that was teaching me and kind of giving me the future vision. But what it would take to get there, and then kind of leveraging all of the outside capital partners to help do ours. So now, we're currently using a co-funding model like you guys. And so every loan that we fund, and we have between 70 and 80 in our portfolio right now, we're in a slice of every one of those deals. So I get my own statements coming from our system, from our finance manager. And like, I don't take any of it. I just let it all roll back over every month to compound. And so that's been neat watching that grow. But as we've built a team around us, and we have some leadership team, kind of the vision that we have is in the future being 80% company funded and only 20% outside capital.
Yeah, I agree. I mean, that's a big thing. And, that's one of our things. Our investors always joke with us. They're like, hey, you guys fully funded, fully company funded, and you guys don't need us anymore. And it's like, listen, I wish I had $50 million of my own money deployed in these deals. I do, but I'm not there yet. But at the same time, there's also a very big sense of we're very passionate of helping capital investors as much as we are helping real estate investors, right? We want to fund real estate investors for them to make money and flip properties and own rental properties. But at the same time, we're super passionate about helping friends, family members deploy their capital and make good, high rates of return, on these deals. So I don't think there will be a day where the investors aren't necessarily involved. I mean, I think it's one investment vehicle that, you can help a lot of people and accomplish a lot of things. Right. I mean, I personally think it's the best, business model in the whole world.
And I would say sometime back, we had more of kind of 100% self-funding idea that we were looking ahead to. But in December, one of our bigger capital partners stopped in for an in-person meeting. He hadn't met our team before that. And so he was here for a couple of days. He has an expertise in helping companies get lean and very efficient with their processes. So we got a double benefit. He gave us some of his expertise there, got to meet the team. And he was telling us how much he appreciated the income from us. And he uses IRA money, he uses personal capital, and he said, the personal capital, he said, I like seeing that come in every month. That's important, income for me. And so that's when we really shifted and said, hey, we can keep at least 20% of outside capital for people who feel like him, people that really appreciate it, that really are easy to work with. And
that's right.
And, they really get a lot of value out of it.
Yeah, because we probably all had our fair share of, capital investors who just wasn't a right fit, just like a borrower. It's not a right fit. We underwrite both of them just as much. You talked about that earlier. Like they're underwriting to make sure we all have credibility as a company. Well, we're underwriting to make sure they have credibility. Just because, exactly. I'll tell you, like one of the worst things that you can do is take on capital from the wrong partner, the wrong strategic partner. They will make your life absolutely miserable, and you'll want to give it back to them as quick as they gave it to you. And that's a hard lesson to learn. And I'll tell you from experience that I know a lender that has a lot of capital that they can't stand. They don't have very good agreements, or not agreements, relationships with their capital investors. It makes their life miserable. And they have a decent sized portfolio. And it's like, that's not fun. Like, you don't want to have a boss telling you what to do, all the time. You've got to set proper expectations up front, and then you really make it a win-win situation. So what's your current team look like right now, and approximately how much do you have deployed, just in retrospect?
Yeah. So there's 9 of us overall. 2 of us are not involved in deals at all. We're really involved in business growth, and really, the implementation of EOS. Part-timers on some of the other areas of the team. And we're just over 11 million in assets under management. And as I said earlier, that's between 70 and 80 loans. Nice. So our target this year is to lend out 18 million. So that's an average of 1.5 a month. And that'll be about a 25% growth from last year.
Yeah. Nice.
We doubled enough for enough years in a row there. We doubled that. I was happy to not have the kind of the stress it put on us to double again. Just another healthy step up is okay.
Well, slow and steady wins the race. We've been slow and steady our entire career. We've never had any massive growth. I've also never hit a home run. I like to hit singles every day. And I feel like, and maybe that's because we're just, we're conservative, you're conservative, you're doing it the right way, because I've always had this opinion that as fast as something goes up, it can come down just as quick or quicker. And, you've been in this business for 13 plus years now. We're at about 17 plus years now. And, we've worked hard. We don't want something to crash down because we didn't have the right fundamentals in place.
Right.
You got to build it the right way. Is there one particular employee that you felt like saved your life? Meaning, like, I don't know why I didn't hire this person sooner. Like, what was like one person inside your business that, and it doesn't necessarily have to be the first person, but somebody that it's like, wow, I can't believe I used to do all this stuff myself.
Yeah. So I'll speak from my side of the business. So I was always raising money, meeting people for new deals, screening the borrowers' calls, and then quoting the deals, right? Making a term sheet. And so that kept me busy. And when we hired our loan originator, that, there's a training period there for sure. But as he got really good at his job, that was a game changer for me, because then I get to move to other parts of the business and really look at growth and quality and systems and processes that kind of got pushed back a little bit there when I was so busy doing all that front end work.
Yeah, it's like one of those things. You're just like, how did I even run this business doing that job without that person?
But hey, I would say and I know you love doing the originations piece, and I know some people not so much. But if anybody has any doubts that it can be done, I'll just say I doubted for a while, because I've got at that time, around 10 years or so of deal structuring experience and looking at deals experience and all that. And I'm like, how could that even happen? But we just narrowed our parameters so that in originations, they didn't have to look at 50 different things. It's just, tightened up our box and we do this or this. And, it can work out. You may have to make some adjustments, but I know for me, it was a game changer, and it was a had to break through that limiting belief.
Yeah, no doubt. I mean, mine was Terry, our portfolio manager. It started as just processing loans, and then moved to like a portfolio manager / COO with a lot of stuff. And I mean, I joke about it all the time. She saved my life because I didn't think anyone else could take over that job. And she's been here for 10 plus, just over 10 years at this point. And I know a lot of people that Ray and I are both friendly with that were in the inner circle mastermind meeting last week. A lot of them are right at that stage right now. They're at like 5 to 10 mil-ish. And it's them or them and a business partner. And they're like just treading water. And it's like and they're not sure, like, who's the first hire? Do I do like an accountant? Do I do a processor? And those are typically, popular ones. And the only reason I was able to like pull the trigger and do it, because a lot of times it's not necessarily financial. Sometimes it is, right? You're like, well, if I give up 50, 60, whatever, $1,000 they're going to cost, like it's coming out of my pocket. But like I had a business coach at the time, and you always think like, well, if I bring this person on, like they're never going to be able to do it as good as me, right? Like that's what you think, which is obviously 100% wrong. And he was like, okay, well, let's say they do it 90% as good, or 80% are good, or 70% is good. You don't have to do any of it. It's like, shit, you're right. And they ended up doing it 120% better than me. And you think you're going to lose control over the business. You think you're going to lose control over your files, but having the right people and just spending. And I know you probably, maybe even better than anyone else in the inner circle group, or go through the hiring process. You guys have really good systems in place to make sure you bring the right people on time. And what's the quote that everybody says, like, take a long, fire quickly, but take a long time to hire. Take your time to hire and then fire quickly. And with your staff, like that's important. And I can attest to as well. We've definitely had some kind of bad apples around HMB, and it makes a big difference. It makes a huge difference.
Yeah, you definitely want the right people. You can train the right people to do some things, some specialties in this business, but you can't train that instinct of being hard, of being, very initiative taking kind of person. That's much harder to train than just how to do the semantics of, a job description.
If you and your wife were, like, how many employees, like, because I know your wife just retired from the business. Did you replace her with somebody else and hire more people with it? Was that what it was? Just to get a sense of like how many employees you think you would need for your size portfolio if the owner operators were still fully kind of functional.
Yeah, if we were fully functional and not working like crazy, probably 4 of us could do it.
I think you're right.
Yeah.
Yeah, I think you're right. You have 2 owner operators, front and back. We always like to say front end, back end. Not everybody looks at it like that. I just always look at it as like, hey, I'm originations. My partner Chris is, CFO, kind of investor relations, accounting, and then you have someone that's front end helping as a processor, someone on the back end helping bookkeeping, accounting, and stuff like that. So yeah, it makes sense. If you had to do, we'll end it with this one question. If you had to like give advice, not necessarily start over, but if you had to give advice to somebody who was newer in the business, I'm not saying starting from scratch, but someone who has maybe a little bit of their own money, plus they've got some investor capital, maybe they got some money deployed into some deals. Like what's one tip or trick or like big takeaway that you learned that would give them some confidence as stuff that they should potentially, devote some time and energy to?
This is going to sound like a shameless plug for you guys, but this is going to come from the heart. You can lose a lot of money in private lending if you don't know what you're doing. And so, like, we won't have time for it today, but the very beginning of my story, I lost my whole IRA before I took the class on it, right? Before I knew what was going on, thinking that I knew how to be a lender. So getting into a group, learning how to do things the right way, learning from other people's mistakes, right? The presentation I gave at the mastermind was, well, what did we do wrong? And what did we learn from it? So being in an environment like that and learning things the easy way instead of the hard way.
Yeah. I mean, I agree, in this business, even though there is a mastermind group and stuff like that, like there's still not that many resources. It's still an underutilized industry. Obviously when institutional capital came to this space, it brought a lot of money in the space, and it brought a lot of vendors and resources and softwares, which is good. All that stuff's good. I know we both use like Mortgage Office, and that's built out more than it was when we started. So that's all good, but take advantage of that stuff. I mean, we've all had business coaches, we've all had people helping us in life, and it shortcuts us. And I guess it just depends. Some people. I mean, you still got to learn stuff the hard way sometimes, right? Because someone who's ahead of you can still tell you 100 times, do it this way. But until you get slapped in the face or you lose money, you're like, damn it, that person was right. Like, you got to have that aha moment. But
try to make it the small lessons. You're right. Some of them you just have to learn by yourself. Oh, my goodness.
I mean, I'm a stubborn person as well. Like, I like to learn the hard way myself. I think we all, part of the way you're wired as an entrepreneur, sometimes you have to. But if there's little tips, it helps. What's a good way to for anyone that's interested in chatting with you, Ray, to get in touch with you?
Yeah, on reifundingpartners.com, they can see what we do, what we're all about, and anybody's free to email me, ray@reifundingpartners.com. Love to talk about that.
Are you just lending in Alabama currently?
95% of what we're doing in Alabama is in Alabama. Yes, we just closed actually this morning our first Florida loan. And we're not really going after that business. It was just one of our current Alabama borrowers lives near that Panhandle area of Florida, did one there. We got some inquiries about parts of Tennessee. Occasionally we'll do something there if we're not stepping in Chris's territory.
Yeah,
but there's enough to go around.
Hey, one of the things we talked about was this data provider that we've been buying data from. And I looked at these transactions, and there's so many darn real estate investment transactions, right? There's a lot of it. So, I mean, I get it. I don't think anyone wants to maliciously step on anybody's toes on stuff. But, I feel like we're all in decent sized markets where there's a decent amount of, opportunity. So, Ray, I certainly appreciate you coming on. If anyone wants to reach out to Ray, feel free to do so, especially if you're in Alabama, because he can be a good resource, for you there. This is a very localized business model we've noticed. So, yeah, any final last words, or we'll call it quits?
Yeah, thanks. Thanks for what you guys do to put information out about this niche industry. People that are in it need to learn and know and hear. So, appreciate you guys tremendously.
Thank you, Ray. Appreciate you coming on.
All right. Take care.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.